Nils Andén, CEO, and Patrick Kortman, Interim CFO. Kindred delivered a strong set of results today, well on the way of reaching its annual targets given. If you were to summarize the report, Nils, what would you like to highlight?
Thank you, Linda. I think it was a really strong quarter for us in continuation of a transformative year. I'm very pleased to see that we can see strong revenue growth, which was an increase of 8% in constant currency, supported by strong continued growth in Netherlands, a really strong growth in France, and also really pleasing to see that Belgium has returned to growth now after a fairly challenging year and a half. The strong performance in the quarter was, of course, led by Sportsbook, where we had a strong underlying margin, but also benefited of the effect of the initial stages of the Euros that took place. Another thing that I think we want to call out was the all-time high in revenues from our locally regulated markets that came in north of 267 million, which was 12% growth excluding North America, which we're very happy about because this has really been a core focus for us. And then lastly, continued focus on cost control, of course, led to a very strong EBITDA, an underlying EBITDA of 73.6 million, which is a growth of 32% compared to last year. Generally speaking, all product segments are showing growth if we exclude North America, and also really nice to see that the vast majority of our focus markets are growing.
Yeah, another good quarter apparently during this, as you mentioned, transformational year for Kindred. If we look at the key markets, as you mentioned, many of them are growing nicely. If we look forward, what would you say, which markets would you foresee would contribute the most to the group growth?
Yeah, I think our approach to this has always been that we rely on a broad portfolio of markets that can offset headwinds in certain markets. I think we are now very pleased with the trajectory. We're seeing strong growth in not only Netherlands and France and Belgium, but also double-digit growth in Denmark and Romania. I think it's also a testament to the fact that since closing North America, we have been able to reallocate more resources, but also more investments into these markets, and we expect this trend to continue. I think across our entire portfolio, we of course are working constantly to improve the sustainability of our revenues, and we can of course see some short-term impacts of changing affordability limits or RG measures, but the trajectory is very positive.
Understood, that's very clear, thank you. And the Euros recently ended, and Spain was the country lifting the trophy in Berlin a little over a week ago. Are you happy with the contribution the tournament gave to the group?
Yeah, I think we're super happy. I mean, the Euros was the highest revenue we've ever seen from one of these major tournaments. Great engagement, not only from our customers, but also internally from all the teams that worked really hard to ensure that our customers had a very smooth experience throughout. Some numbers, I mean, we were 16% higher in revenues compared to the World Cup in 2022. And we had a high sportsbook margin because we had some favorable results, especially early on in the tournament. But we also see increased utilization from our consumers on higher margin products like Bet Builder. And lastly, I think we're very also pleased to see that we can see an increase in the amount of multi-product players across other products than just sportsbook that we managed to drive throughout the Euros. And then, as you mentioned, Spain lifted the trophy. That was probably the only real black mark for the Euros that had a pretty big negative impact for us as a company.
Yeah. And you mentioned the strong sports betting margin, apart from apparently in that one. But during the tournament, and also if you look throughout the quarter, it's been elevated. Patrick, it varies a lot from day to day, and there are several factors behind these variations. Can you walk us through the dynamics here?
No, so of course the sports results impact the margin, and that's why we see fluctuations, as you say, day by day, week, month, quarter, and so forth. And but over time, it normalizes along a long-term average. For us, the long-term average has been on a steady increase, and there are a number of reasons for that. First of all, increased popularity of bet builder product, multipliers, etc., which have an inherent higher margin than the 9.9%, which is our long-term average. You also have a increase from market mix, and market mix is actually not a small impact on it. It's closer to 1 percentage point for this quarter compared to the long-term average coming from the market mix alone. And here especially France, which has a minimum margin of 15%, and also Netherlands, which has a kind of inherent higher margin than the group average. So these are factors playing in. But as we said in our report this morning as well, our expectation is that this 12.1%, it's not that level it will be. We expect now that the margin will more normalize over the coming months and quarters.
That's very interesting and also very clear. Thank you. If we move further down the P&L, we see more and more proof of scalability of the business model. Can you share some color on this, please?
So this is a very hard work that we have gone into over the last year and even more to really optimize our cost base and even reduce it. And this goes across the P&L. It's from the cost of sales to marketing spend to OPEX. And this quarter really showcasing the when we get growth in the business and we're at the same time able to reduce costs, how scalable our P&L becomes. And this is really what's driving now the 32% improvement in the underlying EBITDA. So for the quarter, we actually reduced our OPEX, so the salaries and other OPEX, by over 5 million year over year. Where the salary element is the largest contributor to that reduction. At the same time, we then managed also to reduce our marketing spend slightly, but this is predominantly driven by the close down on North America.
Yeah, so focus on the core business and both on adding growth and also on the cost side is really yielding results. Very clear in this quarter. And Nils, if we look into the start of Q3, it also seems to be off to a good start. What would you say? Can you comment on the remainder of the year, your expectations?
Yeah, absolutely. I mean, as mentioned in the trading update to date, we had a solid start to the Q3. We also had the final stages of the Euros boosting activity. We of course expect slightly lower activity now until the major league starts in the middle of August. But given the trajectory we're on, with the very strong strategic focus and ensuring that we can have a disciplined execution around cost control across the whole organization, we feel comfortable in also reiterating the guidance of reaching 250 million for the year. If we talk a little bit about the start of the Q3, the average daily revenue came in at 3.28 million, which was 10% or 11% in constant currencies higher than the full Q3 last year. And excluding North America, this was actually 12 and 14%. So we're very pleased with the start of the quarter. We had a slightly higher sportsbook margin than our long-term average, but again, as Patrick mentioned, we expect this to normalize over time. Also want to call out, I think, we look forward a little bit, the continued rollout of KSP. We've now gone live in a number of test markets, and we are very pleased with the development and the progress to date, hitting all the milestones and looking forward to further rollout of KSP towards our customers. I think, again, as mentioned, we're now operationally exited from North America. This is, of course, good for our profit and loss, but I think it's also very good for the organization to really be able to focus on our core markets and ensuring that we can have real optimal delivery towards the consumers in those markets. And then, of course, we have the big thing looming ahead of us, with is the FDJ acquisition and the potential completion of that later this year. But there again, everything seems to be on track, also with the French antitrust authorities. So we are just continuing to focus on our core business and deliver as good a results as possible.
Yeah, and all in all, this will be a very interesting journey to follow. And with that, I thank you both very much for today.
Thank you.
Thank you so much.
Thank you.